Good morning, good evening, good afternoon, traders. Steve here, Logic FX Trading, and welcome to our trading room recording on Monday, the 22nd of March, 2021. Okay, let's have a quick look at the economic calendar to get us going. Nothing major today, and there wasn't anything yesterday. So we'll just do what we normally do on a Monday, which is just go through the week, try and pick out anything that would possibly move any market in any direction, guys. Okay, tomorrow morning we've got employment change in the UK, and then on Wednesday morning we've also got UK again, which is core inflation rate and their inflation rate. And then in the afternoon will be durable goods orders and market manufacturing PMI flash. Now, given the how the movements in the bond market at the moment are kind of putting the jitters through the stock markets, particularly the Nasdaq, it'll be interesting to see if these numbers affect the bond market in any way, guys. And then on the 25th, which will be 25th, 3 days time, which will be Thursday, consumer confidence and GDP growth rate, consumer confidence in Germany and GDP growth rate in the United States. Now, that is one that will possibly move bond markets, depending on what the number is, of course. And then the 26th, which will be Friday, we've got IFO business climate in Germany, core PCE price index and PCE price index in the United States. Be interesting yet again. And Michigan consumer sentiment final. So nothing too much there that we need to sit and watch. It's not like the Fed speech or anything like that, guys. But as usual, we'll just keep an eye on those as each day comes along. Over to the news stories that have flipped over the weekend. Real reason to own Bitcoin, according to Bank of America Blanche. Kind of just to sum up, Bitcoin, guys, came out a few years ago. It was mainly all retail guys involved in it. I didn't get involved. Said that the only time I would get involved in it is whenever the market accepts it. The market seems to now have accepted it. Of course, the thing is the price is way up, just under 60,000 at the minute, I believe. But it has become mainstream, and therefore my belief is that it will continue about 60,000. But like with everything, guys, it's the timing of the thing. So for me personally, we'll look at the chart later as we do every day. It will be a case of when you get a drawdown, do you get into it? And just like with everything else, I'm not holding it, I'm getting in. If I can get a profit out of it, I'm taking the profit, guys, at the moment, because of the way it's moved up at the moment, guys, or over the last year. Like everything, it's too high, it's too far, it needs to correct. Will it correct? Well, that's the thing we don't know. If it corrects, then that will be the time to really get into it and hold on to it, guys. And that is the same attitude that I have with the Nasdaq as well, guys. Excuse me. They've come up so far that they need a decent correction, and not just the little correction we've had at the moment. It doesn't mean that things can't push on up, which is the reason why we're still buying, or have been buying over the last few months. But we could well see a bigger correction before I get to the stage, or I would need to see a bigger correction before I get to the stage where I'm holding on to anything, guys. So it's literally still continuing with the trading strategy we've run for a year now, which is get into something when it shows you a profit between 5 and 10%. Get out, unless it's coming down again and you haven't taken your profit. Then you can get out for anything above zero, or around minus. If it looks like it's going to go further short, you can get out around there. And that's the strategy I'm going to continue to take. Now, the downside of that strategy is that when things do run and do take off, that you don't get the whole hit, as it were. But the upside of it is that if we get a crash, that will be much less exposed to it than we would be if we were holding on to things. In other words, we'll not lose the money that because we're taking the profit off the table. We're not leaving it on the table. And there's nothing worse in my mind than being up 20 or 30% on something, and the next thing you know, you're back to zero. I would rather have accumulated that 20 or 30%, put it into the account nice and safe, and then when things go, you're not hit as bad. Okay, now it's a tricky thing to do, guys. I'm not saying that it's easy, but that's what I'm attempting to do. Fastest growing IPO stocks, 5 IPOs, expecting up to 425% growth in 2021. Now, just be careful of IPOs, guys. As you know, I've got into a few recently. Normally, I don't get involved in them. The one gave me a nice little profit very quickly, and the other two I'm stuck in. So be careful of IPOs. But there's a little article on them if you want to have a read of it. ARK Invest fires off 3,000 price target on Tesla. Do I doubt that Tesla will get to $3,000? Well, I'll not doubt that it'll get to 2,000. Let's put it that way. But it's about time. You see, they're saying approaching 3,000 by 2025. I'm not setting on something until 2025, guys. Not at the moment. Not with the trading strategy we've got at the moment. Not with this account. So, so there could be a lot more downside to Tesla before it even gets back to its previous high, never mind 3,000. Buy these 3 unstoppable value stocks. Now, when you're talking about value stocks at the moment, that's something that does pick up my my mind. I've looked at these. The only one that I would buy at the minute is AMAT. Now, I need to write that down because I want to show you the reason why I would buy it. The other two are just not in the right place for me, technically, to buy. AT&T and Facebook. But listen, I'll tell you what we'll do. We will have a look at those when we're looking at the count and just show you why I wouldn't be interested in them. At the moment, I'm not buying anything, guys. That's the plan. As the day goes on, sometimes, you get an itchy finger and you start pushing the button. But at the moment, the plan is to take money off the table, not put money in. Warren Buffett's bold crypto stance. Can't remember what that one is, guys. I read it yesterday, but it's there for a read. We're entering the biggest technological transition in history. Yes, I agree. And yes, I agree tech stocks will be the way of the future. And yes, I agree that tech stocks are going to give us great returns. But at the moment, we need to be very, very careful. It needs the correction, folks. 5 large cap stocks that turned 100,000 into $1 million a year. This is just the way the Motley Fool likes to put things, guys. Yes, if you had 100,000 to just put into something and let it sit, you would have made 4,900% on some of them. But remember, this is hindsight. This isn't what's going to happen. Plug Power, yes, if you'd have got out at the right place and get in at the right place, that's true. But at the minute, they've dropped like a stone. So now the question with Plug Power is now the time to get into them? Quite possibly. So we'll have a look at Plug later on today. NIO, we're already in it, but I'm a little bit wary of opening anything more on it. Penn National Gaming, not something I know about, guys. Novavax, we've been in and out of Novavax and made a profit every time. GameStop, well, obviously I'm not going to touch GameStop. Okay. investing in Vanguard ETF right now could make you a millionaire retiree. It has to be the Motley Fool, guys. Listen, the information the Motley Fool gives you is good. The headlines are a little misleading, guys, but I was looking at Vanguard ETFs last week or a week before, maybe it was, and a lot of them are very similar to ARK. So I wouldn't invest in both. Unless you looked at both and you saw that maybe there was something that Vanguard were offering that ARK aren't, guys. The Real Wealth of Wall Street has some thoughts about the stock market. I actually read this about half an hour ago, guys. Really interesting. I find this guy interesting. Yeah, interesting read. Doesn't mean he's right. But one of the things that he is talking about is about the whole aspect of giving free trading for stocks. And he's saying, you know, you're not really getting free trading, because I don't know if this is the place to talk about it, but I'll just try and cover it very, very quickly. He's talking about paying for order flow. So in other words, instead of the broker, who for me at the minute would be eToro, working on your behalf and getting you the best value, the best opening price and the best closing price, and because they're not charging you a fee for doing that, what they do is they're more or less working for the market makers, because the market makers are paying them money. Now, whoever pays them the most money, that's who they'll go with, and therefore they're not getting you the best price. So it only works out at a few cents here and a few cents there each time you buy and each time you sell. In other words, the quoted prices that you're getting, but you know, obviously the spread, as it's called. But eToro and Robinhood and anyone else that's offering free trading on stocks is not working for you, guys. And over time, it works out that you'd be better off getting a narrower spread by paying a fee than what's happening at the minute. That's the point that he's making. So it's interesting. Probably doesn't really matter that much when you're dealing with a few $1,000s here and a few $1,000s there. But once you start getting up to, you know, tens of thousands or even millions of dollars, then that spread really does translate into real money, guys. The sort of money that you could do something with. We could be at the start of a 2-year bear market, warns veteran strategist. I listened to this at CNBC, guys. You can't read the article, but you can listen to the little video. Like everyone, he has a valid argument. But do we change our trading strategy to go, well, let's start selling everything? I don't know. What it means is if it's real, what he's saying is that we're going to be sailing through choppy waters and really struggling to make a profit, guys, if what he's saying is true. And what he's talking about is what everyone's been talking about the last few weeks, is the oversupply of money, the threat of inflation, and that's going to draw prices down, guys. Turkey's stock drop triggers circuit breakers as banks tumble. And the reason I put this in isn't because any of us are trading the Turkish stock market. It's just to remind us how quickly something can happen and make the stock markets crash or tumble, as it says here, guys. How quickly it can make them tumble. Of course, if this was a Motley Fool article, it would be crash. Because it's a Bloomberg article, it's tumble. Because Bloomberg is more true to, you know, what's actually going on out there, guys. So just to remind us that, yes, everything will be sailing along swimmingly. And we're all patting ourselves in the back because we've made 3% or 5% or whatever for the week or the month, whatever it may be. But you can lose 2-3 times that in a day when things come off. It's the reason why you always need to be cautious. Sales double, profits up 22 times at America's biggest rare earth metals company. Guys, you know, if you're looking for something, and you should be looking something to diversify your portfolio into, because of the threat, the downside risk of tech at the moment. Here's MP, but yet again, we'll look at that, guys. Look at the chart. Look at, if we can, and see if it's worth getting into. Where are we? Oh yeah, AstraZeneca, GameStop, Nasdaq, Texas Roadhouse. 5 things you must know. The street. So what's happening at the minute is Treasury yields have pulled back a little bit. Nasdaq's up at the moment, just slightly. Dow Jones and S&P are just down slightly. It's probably going to be a pretty flat day, guys. But that's better than a drawdown day. And obviously we'll be keeping an eye on this as the week goes on, guys. Okay, that'll do for our little intro to the week. Let's go and start looking at some charts. This must be 1 hour. Oh my goodness. So, bit of a pullback on the Dow Jones, folks. That's what we've been looking for anyone that's looking to get into anything. The fact that it's pulled back may well present us with some buying opportunities within the Dow Jones. If there's anything specifically that you're looking at, there could be a bit more downside to it. Let's see how it develops during the week. S&P, same thing, guys. Listen, it's nothing different to what's been happening over here. We're not suggesting that it's the start of some big drawdown. You make a new high, you get a drawdown, guys. You make a new high, you get a drawdown. So let's see how it develops. Nasdaq, as you can see, it's doing the opposite. It's pushing up a little bit. So it's on this upward run. For the best that I can see, I think this is what we're getting. That we discussed this at length last week. What we've basically done is taken that and reversed it, just to give us an idea of a 1, 2, 3, 1, 2, 3. Now, will it get to the top or not, or will it break the top, is the thing that we don't know. But certainly that move there could afford us to either get out of tech stocks with a little bit of a profit, or if there's anything we want to fancy buying this week, and if it does move in that direction, then by the end of the week, you may well have made, a small profit. Time to get out of it. But if it does do that, guys, then I'd be very wary of trying to trade any further up. So we could end up running flat for a while. And even that, if it's true to Elliott, which, they're not always true to Elliott, but it's enough of a warning sign for me that if we did get an ABC double top on this, you could well see a big drawdown. Now, so if this is coming up here, because I'm a defensive trader, I'll be offloading what I can as we come up and waiting to see if that's what happens. And if that's what happens, then we should, be pretty well protected from it. And if it gets down to here, then we'll look to start buying the dip, as it were, and coming back up. I don't know for 1 minute if that's what's going to happen, guys. All I'm saying is if that does happen, then that will be a really good place to start thinking about, pushing up. The other aspect that could be happening here is that that that's not going to happen. And in actual fact, this is part of a, a bigger downward trend. What's making me think that that's not the case at the moment, and yet again, Elliot's not always right, guys, is that that is so obviously a 3. And as I said last week, if it was obviously a 5, then I'd be very wary at this point of getting another 5 there, guys. But I do believe at some point the Nasdaq could be back down there, whether it comes directly or via a double top. That's whenever I'd probably be a lot more interested in buying Nasdaq shares, guys. Now, having said all of that, the idea that I'm going to sit on my hands for a month to see if that's going to happen is probably very unlikely, because it would take an awful lot of discipline to do that. But we'll see how it goes, guys. But that's what's in the back of my mind. So I will refer to that until it gets obvious that it's either happened or it is happening or is not happening. So just to reiterate what I mean there is, if this continues to push on up there, then it's not going to happen. And at that point, I'll say, okay, that double top idea and the drop off isn't happening, and therefore we can stop talking about it. But if that doesn't happen, and we get any combination of that dropping from there or slowly getting a double top, then that will be my focus down there. And that's where I would start to look at buying back into the stocks that have abandoned over the last few weeks, guys. Your Squares and your Lemonades, perhaps, and your Plugs, and maybe even Tesla, NIO, all the stocks that we've been making a little bit of money on over the last few months. Okay. Nikkei. Double top, pull back. Now, was that where it was on Friday? 17th of March was, yeah. So when I got to there, we said we're looking for a drawdown. We're getting a drawdown. Will it go the whole way? Don't know, guys. But certainly, it just comes back to prove to you, buying on a double top is not the best policy unless you're in something for the long term and you don't mind running through a drawdown and waiting for it to come up. UK, a little bit of a drawdown there as well. A little bit of doubt maybe creeping in about how fast the economies can open up again. UK is now running at 41% vaccinated. There are a few lumps and bumps in the road. There's talk of India not being able to supply as many vaccinations as initially thought in time. Remember, on time we're talking about here. And then the EU yet again is panicking about the fact that they're running on 9% and the UK is on 41%. Doesn't look good for them. So they're now talking about blocking more deliveries from EU-based factories to the UK. Yes, it could be a bit of a bump in the road for the UK's recovery, but they're already 41% vaccinated. From an anecdotal point of view, my nephew has been called up for given an appointment for his injection, and he's 40, guys. So, and with no major underlying health problems. So it shows you how far ahead the UK are, and America, by the way. America's there as well. So this will probably continue up, folks. You could get a bit more of a dip, but the trend for me is up at the moment. Remember, these are still undervalued compared with the American stocks. The reason we're looking for a bit of a drawdown in the American stocks is because they're so overvalued, guys. If you go back and look at this, and you look where they came from, that, you know, they're what, 66% of the way there, whereas the US stocks are up there somewhere. So that's the difference between saying that needs to correct and that needs to come up. French hit a little double top there, guys, of where they were before. So yet again, you're looking for it to come off there. Now, what I've drawn there is a bit of a drawdown and then a push up through. But remember, given that it's a double top, you could well get a deeper pullback before you get a run and a breakthrough, particularly since they're back in lockdown. They're really struggling to get vaccinations out there, guys. So yet again, it's back to the timing of when will they get, you know, some inflationary pressures. When will they get their GDP running? Then after that, you get your inflationary pressure. So that, you know, I think there's more downside to this. I'm not suggesting for 1 minute that you trade it down, but I wouldn't be surprised if you got a deeper pullback there before it pushes up. Germany spiked up, come off. That's what we're looking for, but still look for a bit more down. Doesn't have to all happen today, guys. This could push up, maybe give a little ending diagonal before it draws down into there. Remember, guys, when you're doing this sort of analysis, it isn't, you know, a crystal ball. What you're saying is that if something does this, then there's a high probability that it will do the next thing. So when you see something like this, there's a pretty high probability, or let's get away from probability, there's a pretty good chance that you would get something like that. Not enough to want to trade it, but if it did that, because you're looking for some sort of zigzag, remembering that that's an impulse. If you take it back to the Nasdaq, you can see it in action, guys. There was your impulse there. Then you got a flat 3, and then you get another impulse. So then if you're going to get another one of those down here, then you need some sort of 3 there. And of course you could get an impulse down, and another one, and another one down. That's another, whenever I'm saying that, you know, you get a drawdown directly from here, or you get a push up and draw down from there, that would be the mechanism of it, guys. It would probably come down in a 3 as opposed to a 5. So that isn't actually something I've talked about. You could end up with that scenario where it drops, comes back up, drops again. Then you get down into the maybe a 50% retracement of the last move up, and then off you go. So it's still entirely possible that we could get that, which yet again is the reason why I'm being very, very careful, and I'm trying to take stuff off the table rather than adding it to it. So getting back to where we were there, which was the, which one was it? Oh, this one. That's an impulse. Possibly we're in a little corrective phase. And because it's an impulse, you could well get that. If it came to there, then you could probably happily trade on up. Unless things turned out to be awful and you end up with the scenario that we talked about earlier, you get a pullback, you get a drop, you get a pullback, you get a drop. I don't think we're getting into a bear market, guys. Not yet. We're in a correction. That's the reason why I'm not pushing that whole idea that, you know, that even the Nasdaq is going to do that, because that for me would be more than just a correction. That would be the start of a bear market. So I don't think we're going to get that. So I'm going to take that off again. Aussie. Still running flat, guys. Well, it's kind of come off the bottom again. It's pushing up. Chances are it'll push back up to the top. And eventually I think it will break out, unless there's a world bear market, which is a different thing. But I don't think we're due a world bear market until inflation really starts to kick in and banks start to tighten. So that could be this time next year or even into 2023, guys. And then the Russell, which is a new one that we started looking at, which is to do with small caps, Russell 2000. Listen, it's come up so much that it also needs a correction. Let's put it in the daily to get a bit more information. There you go. Massive impulse. It could have one more leg up on it, although that looks suspiciously like an ending diagonal there, guys. But at the moment, just looking at that move, we only look at one structure at a time, remember. So it's come up, there's a possible running flat in there, and then we've got another one. And if that didn't look like an ending diagonal, I would probably be saying, listen, this is going to push on up. But because it looks like an ending diagonal, chances are it'll come off there to give us some sort of flat correction here, and then it'll break out. But it'll be of that order of magnitude there, guys. So I'm not expecting it to do that, but certainly if it came down, well, ordinarily you would look for 50% of that if it is an ending diagonal. But I don't know the fundamental reason at the minute why that would come down 50% off that move there. See it, folks? Let's just fib it. And you take it from, let's try to think where this ends. Does it end there? Is that it? Or is that it? Quite honest, it doesn't matter that much. 50% retracement. Bring it down into there. There you go, guys. And so if it got anywhere down around there, that would be a great buying opportunity for any stocks that are on the Russell 2000. Remember, we're not necessarily trying to trade the index. We're looking for dips in order to buy the stocks. Does that have to happen? No, it does not. But yet again, it's if, then. So if that happens, then we look to trade long. VIX, I think it's up today, folks. Well, not much. Slightly up, you can see there the pre-market. So there's a slight move, so I'm not expecting any fireworks today. Thankfully, I don't mind fireworks when when the Nasdaq's going long, but I'm not so keen on that, fireworks when the Nasdaq's going short. Okay, my view on this hasn't changed. I think because of the potential upside growth of the US economy, plus or the expected upside growth, to the US economy, and the attractiveness of potential bond prices going up, which eventually, you know, will lead to the Fed starting to taper and then tighten. So for that period of time, we'll probably see the dollar moving flat or slightly up, as I've been saying. And then whenever the Fed starts to tighten, you'll see the dollar taking off. Now, when that's going to happen, we don't know, or even starting to taper, then you'll see it starting to go up. Now, I'm not expecting it to go bananas, guys. We're not expecting it way up there, but certainly it could come up into this mid-range area, and certainly to the top of that fourth wave there. Could certainly come up into there and maybe break a little bit. I don't expect it way up there though, guys. That depends, of course, what happens in the rest of the world. Because if the rest of the world's economies are doing really, really badly, then, you know, you could see a massive flow into the US economy. The downside to all of this is just if we look at the future, so far as, well, not the future, if we look a year down the line, all we're getting is stimulus packages which just been released. We're getting massive bond buying by the Fed. We've got interest rates near zero. Sorry, guys, there's a blooming magpie creaking outside my window. Let me go and chase it. Two of them. To make that much, anything that any external noise affects my concentration, guys, so I have to get rid of it. Yeah. So just to try and pick up where we were, with all this money coming in to the US system, which should keep the dollar low, but at the same time, because of the state of the rest of the world economy, then that's going to keep the dollar attractive. So that's why we're saying it'll probably move like this, guys. And then as the interest rates start to kick in, then we could well see a spike in the end, but I'm not expecting it up there, guys. It'll probably come in mid-range. We could actually end up with something like that, although that's a little bit too much for what I'm looking at, guys. I'm looking more of that sort of a move in the dollar rather than sharp moves up and sharp moves down. Because remember, this is a daily time scale. Those are some pretty big moves going on in there, guys, when you get down to the 1 hour time scale. And as we've often talked about, that was a big move down there. But to be honest, the whole way down, we're trading it very warily, especially when it kind of got back into there. It wasn't until we got that fourth wave in that we said, oh my goodness, this is going to go for one more, and then come back up. And that's what, Elliott really did work out for us, other than, of course, is that we were looking for a bit of a deeper move and then an impulsive move before we got that. But generally speaking, from there to here, we've got it right, but didn't trade it correctly through that period because we were looking for an impulse. We kept getting stopped out, kept getting stopped out. And it was only with hindsight that I realized that would have been better to have a different trading strategy. With a different trading strategy, you could have really done well through that period. So that's the strategy I'm using through here. If it turns out to be impulsive, okay, fair enough. But it actually wouldn't mind it being a bit like this, guys, because if you get it wrong, a few weeks later, you've got your money back, Okay, so that's DXY. Euro will clearly look different, or sorry, the opposite of that. So if you want the opposite of that, where are we? Copy something like that, stick it on there, and I think that's how you're going to see the euro dollar over the next lot of weeks and months, guys, through the rest of this year, possibly even, maybe extends even further. That's how I think you're going to see it. That's why I'm shorting the euro dollar. Let's get down to the 1 hour time scale and see what's going to happen today, or what we think is going to happen today. Okay, let's just take that out. So we had this running like that. The alarm went off last night, so I replaced it. I still think the trade's short, but of course we could get a bit of upside in the meantime to it before we get our short. I have now closed that position because I got 5% out of it. It was the one that I was shorting from here somewhere, guys. And then we went through that and come back down again. So I've now closed that. And then, of course, the other two that we made money on the other day was when it did that, when I thought I was shorting it, and I accidentally opened it long because I did it in a hurry. So we made some nice money there, took it off the table. But yet again, it shows you the importance. Well, Guys, everyone has a different trading strategy, but it shows for me the importance of taking your money when it's there. So we took a couple of 5% off there the other day, and if we hadn't taken them, this could continue on down and we'd never see that position again, guys. So potentially a pullback here and then a drop like that, guys. It's not necessarily going to look exactly like that, but some sort of pullback like that, and then you get a drop. Maybe a bit shallower, and then you get a drop. And of course, it could go from here. We don't know, but that's what we're looking at. Don't think it'll go today. If bonds are pulling back today, and not be a big short day on the dollar. Pound, same thing. It's for me, it's flat to short. But probably more flat because the pound's looking quite good at the moment. UK economy is probably going to open up sooner than other European economies, and we're comparing this with other DXY constituents, guys, not necessarily emerging markets. So at the moment, I don't have any great preference of where to trade it. I don't particularly want to trade against the dollar, but any time that it comes up, I'll probably try and trade it short. That's just personal preference, guys. I like to trade the dollar. I like to trade in the direction that I've forecast the dollar. Now, it could be over the next day or so that we say, well, listen, this dollar is going to drop back down into this range. Remember, it's not going to necessarily look exactly like that. But it's possible that the dollar would drop within this range. And if that were the case, then you could quite easily come over here and trade that up. More so than the euro, because at the minute, the euro doesn't look so good, folks. Aussie, also, there's a possibility of a leg up. So if we start to see the dollar dropping, for a few days, there's a possibility of taking that trade up. But if you miss that trade, don't worry, because I think there'll be another one back down from there. And we don't even know that it's going to get there. It's just if the dollar starts to drop, guys. New Zealand, going to be the same thing. We're forecasting it running flat. It's entirely possible that if it is going to go short, that if you look at that, a 3, there's a 3. Is that the start of the next long move down? That's possible. And if you get it wrong, then it will be a case of obviously you need your stop loss above there in case the dollar pulls back, and then the next move down from there, guys. US CAD. It's another one I think is going to run flat to long. So there's possibly an upside to this. Remember that the whole way through here we were calling it short, and now we're calling it flat to long. So this pair will either bounce along like that or gradually move back up like that. US Sweden. Possible little double top there. I would prefer to trade this short than long, folks. So there's potential in there. USD, SEK. Short. I don't know how enthusiastic I am about that at the moment. Well, I do, and I'm not enthusiastic about it. But of everything we've looked at so far, the reason I'm not enthusiastic about it because it's trading against the dollar, and I don't particularly want to do that. So potentially you allow it to come down into there. You're trying to develop some sort of structure here, folks. Let's get a couple of trend lines in. Going to run something like that. Don't know exactly. Listen, it's possible that that's your trend at the moment. So it's possible that this drops. I don't know if I particularly want to trade it, but if it did drop, I'd be very keen to trade it up. Yet again, guys, I think this is long, but because it's come so far so quick, I'm reluctant to trade it long from there, because you could well get a drawdown, you know, into the 50 or maybe the 61 retracement of the latest move, and then you'd look to trade it up. Yes, China, same thing. You can see there, we've been talking about it. Not entirely sure where the, you know, whether it's going to do this, or it could run flat, guys, and then we could end up with something that looks like that. So there's a possibility of a downside to this, and then I would try to look to trade it up. It could just potentially continue up from there, guys, but I'm only looking for the highly probable things. If it came down to there, it would be highly probable that would go long. From there, there's nothing that's particularly highly probable. Swiss, same as with the yen, guys, needs to draw down a bit, and then we'll look to trade it long to there initially, and then we'll see from there. South African rand managed to get out of this, guys. Remember, got it in the other day when we thought that the dollar was going to go short, or sorry, long, and it actually went short. Got caught on the wrong side of it. A little bit of madness on my behalf. Came back off yesterday, and I just got out of the trade, guys, because I'd got into it for the wrong reason. So I just got out of it. I was long on it, so no, yeah, there's it there. And so it looks like it was the right idea to get out of it in the short term. So we got long there because we thought that the dollar would go long based on what Powell was going to say last week. And he stuck to his lines, guys. He didn't shift one iota. So we got this. Slowly but surely it came back up. And last night it was close to breaking even. I don't know if I got out there or there, but I got out for -$1. But we were down $25 or whatever in there, guys. So since it's done this, what do you think? Well, there is the possibility that it will come back down into there, and if it does that, that would be the place to try and trade it long. Not there where I tried. I did there what I've said to you guys for years not to do, which is don't trade the news. Don't trade the politics, or not the politics, the what the Fed says. But so then why did I get involved in it? Well, I got involved in it because I thought if he's going to start to taper, then we're going to see the Nasdaq dropping like a stone, and I get into that as an insurance policy against that. Now, as it turned out, you know, what are we talking about? Oh yeah. The Nasdaq didn't drop like a stone. He didn't say what we were feared that he might say, and the dollar dropped against a few currencies, emerging market currencies. In fact, it dropped against everything, but it came back up, got out of it. Okay, so our little insurance policy, we got our money back on it. And Turkey, well, there you go, guys. I'm pretty sure what happened here was they fired the financial minister of finance, which the market must have believed in, and we got that. Now, we were looking for a move in that direction, guys. Anyone that listen, I haven't traded, I didn't take it, but anyone who took that on Friday or even last week with the expectation that that's the bottom, it's starting to come up, well, guys, I would take my profit either there, or even here. and let this settle down and then see where it's going to go from there. But when you get money like that, for me, I would take the profit. Mexico. Yeah, I got out of this with a little bit of profit. Yet again, I traded this in the wrong direction. Shorted it the other day. It went long. We were actually down $50, which is nasty when it happens so fast, guys. But I hung on to it. And last night when the markets opened, it opened down here somewhere. I did struggle to close it. And what was the other one to struggle to close was the South African Rand and the Swiss yen. I was up in one of those, and by the time it closed, it was just in the negative, which was nasty. But there you go. That's trading for you. So I've been expecting this to move off in that direction. So maybe I could have hung on to it, but I just didn't fancy it, guys. It's the first time I'd ever traded the Mexican peso, and got a little bit of money back. But yet again, the only reason I got into it was because of the insurance policy. Gold, it's continuing to creep up, guys, but the trend for me is still short. Silver, it's actually dropped in the meantime, and I think the trend is short. But whether it's going to drop there like that or not is another thing, guys. What I'm probably going to do with these is leave them alone until they're low enough, and then buy SLV and hang on to it and see when it starts coming up again. Bitcoin, still bobbing around there, guys, just under its all-time high. The one thing that I said about it is that there seems to be an ending diagonal going on here. It's possible that it pushes up to there, and if it did that, then I would definitely be looking for that. But sometimes, you know, the patterns don't always, you know, they're not symmetrical all the time, guys. So you're kind of looking for something like that for an ending diagonal, but often they'll just, you know, they'll kind of come to there and then they'll go. So that's what that's done. It's just broken the top. It's not symmetrical, but nonetheless, it's possible that that's the top. And therefore, what do? Do you trade it short? No, I'm not going to do that because my trend on Bitcoin is long. But it's also not necessarily a very good place to be buying into it, because you could well get a sharp move down sometime the next few weeks. And if it does that, I'll buy long, guys. Yet again, if then. Oil, running flat, guys. There could be a little bit more downside to it, but the trend is flat to long. Euro CAD. A month or so ago, I was calling the CAD, the Aussie, the pound, and the New Zealand all short against the euro, but I didn't have the courage to trade any of them. And at this stage, it's getting pretty well developed, guys. So I still think the trend, I still think the trend is probably down, but you're going to need some sort of pullback in order to give you your setup. It'll be the same with the Euro Aussie. I still think the trend's down, but given this structure, structures of the guy always look like they want the complete zigzag and then maybe. So it turns out to be some sort of flat, and then you get that. If the dollar's going to go long, guys, the euro will go short. Having said that, if the dollar's going to run flat, then you could well just see a flat run on the euro as well. But that's okay, because then it means if it comes up, it'll run back down to there at least. That's plenty of room to make some money out of. The problem is that I don't know that it's going to do that, so I wouldn't suggest you try to trade it up. Euro New Zealand, same thing, guys. There's a possibility that it'll push up, which will give you a good setup to go short, but it could go short from here, and it could just continue that, guys. Euro yen. Nice little pullback in the yen. I'd like to see a bit more before potentially trying to trade the yen long, but I wouldn't. Euro's not the best place to be trading the yen. Yen dollar would be better, but the problem is it hasn't come off against the dollar. It shows you the dollar strength. It's come down a little bit, guys, but not enough for my liking. So maybe you could take that, but I'd like to see a bit more downside to it. Euro Swiss. What was I? Oh, Euro yen, Euro Swiss, same thing. You like to see a bit more downside, maybe into there, and then you look to trade it long because of weakness in the Swiss, not necessarily strength in the euro. And Euro South African rand, it'll do the same thing as with the South African rand against the dollar will do, folks. So you've got to ask yourself, is that the bottom? Or is there a bit more downside? But I think the trade will be long, certainly back into that sort of level. Pound CAD. Yeah, I refused to trade that short whenever it was starting to come off, basically because I think both of them are going long. With the oil price starting to come off, maybe this is the time to try and trade that up. I don't mean the oil price is coming down, by the way. I mean it's come off its highs there. Although I'm not sure how much that will affect the overall price of the CAD, folks. It's not that much tied to it, because you're still getting a really good price for oil. You're getting $60 plus minus, or plus, should I say. Pound Aussie. Yeah, it's another pair that's going to not move impulsively, so it's going to be one of those guys. So it's a case of any time it drops, trade it long. It drops, trade it long. Or if it's going to run flat, you got to choose: do you trade it that way, or do you trade it that way? I suspect that way, because I think that the pound, as the UK starts to open up, remember that the Aussie, excuse me, sorry folks, remembering that Australia hasn't been as badly hit by lockdowns as the UK, Europe, etc. have been. And the only thing holding their economy back is, the slowdown in growth of the world economy. But as that starts to open up, then maybe you start to see the Aussie continuing to grow, or do you see the rest of the world catching up? Have to think about that one, guys. And then pound New Zealand. When we were here, excuse me, folks, a bit of frog in the throat. There we go. When we were here, we were looking for it to maybe drop, and we're saying, well, if it does that, then you definitely trade it long. The problem is it's kind of run flat since then. So yet again, if it were to drop down to there, I would look to trade it long. For me, there isn't a lot of obvious trades on currencies at the moment. Yet again, as you can see there, once something's moved that far, guys, you got to just start being careful, because it could well drop down to correct some of that before going long. Pound euro, yet again, look at the move up we had. This could end up just running flat for a while. Therefore, if it were to drop down, I would look to trade it long. Pound yen, starting to get a bit of a pull down. That's what we're looking for, a bit more, maybe down into there. Then I would look to trade it long. Aussie yen, same thing. We were looking for a drawdown. Got one at the minute. I would like to see a bit more, maybe down into there. Guys, these might not come off, but I'd rather wait for that and then trade long with a bit more confidence than I would from there. Aussie New Zealand, we hit a double top. It's bounced off the double top, as you would expect. I do think there's upside to it, but I'm not sure about this structure that it's created here. Because if it's going to run flat, that could well come back down into there before going long. So it's a bit of a worry for me. I'm not in it either. Guys, if they're not obvious, don't be trading them. That's the long and the short of it. And we will go through periods of a few weeks where we're not entirely sure about things. And therefore, you're best off just sitting on your hands rather than risking your money and then getting drawn into something which that goes in the wrong direction, and then it can drain your energy, guys, drain your motivation. So yet again, Aussie Swiss, I think there's probably more upside to it. If not, then it'll be flat, and therefore I would like to see it drawing down a bit to at least give us a chance at running back to the previous high. Aussie CAD. Let's zoom in a little bit. It's come up very, very dramatically, hasn't it? Just looking for a target, guys, you know. You certainly wouldn't argue with them, you know, potentially coming down to there, would you? Where's the right color? Let's take that fib off there. I don't know, guys. Listen, I think it's short, but whether it's going to go short from there or whether you're better waiting for a push up before it goes is the thing, because that's 1, 2, 3. Are you doing 4, 5 as a diagonal? And then it needs a little pull back, maybe into there, the 4th, and then you get your next one down. I'd prefer to look for something like that than to try and go short from there. Swiss yen. Ooh, that's nasty. Okay, so what happened last night was when it opened down here, which was me in the profit for all 3 that I still had on. And I tried to close them and it wouldn't allow me to close them. You know, closing pending. And in the end, I said to myself, they're going to wait till that comes back up before they close those. So I cancelled 2 of them because I knew it would take me into the red. And I closed 1 for minus a few cents, guys. Initially with 4 on, I got rid of 1 as it came down into there for a 0 or thereabouts. I got rid of another one as it came back up to there for a 0, but I was hoping to close it for a profit. When it was there, all of them, the 3 that were still open, were all in a profit, and I tried to close them. Couldn't get closing them. This morning they came back. There were still a few dollars off, and I thought, well, don't be closing now because it'll, probably get down into there. And it's done that. So that's me back into the red with them again. But it doesn't mean that it's going to take off in that direction, guys. It just means it's going to be a longer period of time before it can get out of them. If you look at that move, you look at that move, and then you get a quick reversal. Look at that. Ending diagonal, came off again. So you'll have to see where that goes to. But for me, the thing's running flat on a higher time scale, and therefore at some point it'll come down to there, but could push back up before it does it. Disappointed. CAD Swiss, we're looking for a bit of downside to that, guys, before we can try and trade it up. Cad Yen, got a bit of a downside to it. I'd like to see some more because that was such a move up that you'd certainly be looking for more downside to it before trying to trade it up. Of course, it could go long here. If you look at what's happened to it against the Swiss, maybe we're seeing a drop on the yen today. There's a little move up against it there as well. Not so much there. There's the same move. So the move isn't on the Swiss there, guys. The move's on the yen. A little bit of a move in there. So Cad Yen, possibly that'll push on up. But I would prefer to see a half decent correction down into maybe the 38. New Zealand yen. Yet again, possibly it pushes up from here. I was looking from here for it to come down into there. New Zealand CAD. As with the Aussie, guys, I'm looking for more downside, but I wouldn't want to go short from there. So we got a bit of a push up. I would look to trade it down. New Zealand Swiss. I'm also looking for a bit more downside to this, guys, in order to trade it up. And it could just end up running flat for a while. So if you bought from there, you'd make your money, wouldn't you? GDX. Well, just reflecting gold, guys. The problem is I don't see anything on the radar at the minute that would make gold do that. And therefore, any push up would probably be followed by a drop. And then at some point when inflation starts to kick in, you could well see gold taking off again. Although this time around, we've got to take into consideration what amount of that Bitcoin will take up. Just depends on the difference in market capitalization, which I know gold's massive compared with Bitcoin, but it depends how much Bitcoin continues to go up. Okay. We'll not go through all of the stocks. Maybe pick out a few. Let's have a quick look. Apple, just to get a general feel of where the Nasdaq's going. Should open up a little bit today. That's a 5, which worries me. Because when you get a 5, often, not always, you'll get another 5, guys. Amazon. That pretty looks like a 5 as well, guys. But we have had pretty impulsive moves down before that have been, You know, so is this a bit of a pullback before it drops another 5? Don't know. I hope not, because I'm long in it. ARC. Yet again, this one isn't as obvious. It's probably more likely a 3 than a 5. Reason being that it should reflect the Nasdaq as a whole. Impulse, flat correction, impulse, which means that this could potentially push back up to there, unless the scenario that we were talking about earlier is in play, where you get a 3, you get a 3, you get a 3, you get in other words, you get a W, X, Y. That's American Waterworks Company, which I bought into the other day. It's kind of sitting around in the, you know, just under profit. Yet again, if you take that same argument, that's definitely an impulse. So are we on a 3 and then you get another one? I don't know if the fundamentals lead to that, folks. Remember, we've got to take fundamentals into it as well. The main reason for me getting involved in that was just a rotation out of tech stocks, guys. Editas and CRISPR, possibly a 3, and therefore it starts to come up, but I'm not overly confident in them. I'm not going to buy into them again. I'm going to hope that they come up and we can get out of them, rather than trying to buy up again, guys, because if there's more downside to them, then you're just throwing, you know, more money, good money after bad, as they say. Quick look at Easyjet. Now, there could be a bit of downside to this, guys, reason being that with Europe still in lockdown, with them not advancing as much as the UK with their program, where is there for the UK holidaymaker to go, and will the government allow them to go there and come back without getting into quarantine? So there is still a doubt over this summer's travel industry, and therefore you could well see you know, a drawdown in this again. If it does, I would buy it. Quick look at Lemonade. Yeah, it's got that same structure. Could start to come up from here, guys. What I'm doing now is I'm looking at the price to earnings ratios now, guys, and some of them are ridiculously high. In fact, I'm going to pause you because there's one I looked at last night and I couldn't believe it. It was so high. I'll go and try and see if I can find it. Sorry, guys, I couldn't find it. It was a company that I just thought as a run-of-the-mill company would have a price to earnings ratio, you know, in the 20s or maybe even the 30s. But it was some silly number like 500 or something. But if I come across it again, we'll talk about it. But do keep an eye on those price to earnings ratios, and don't be buying anything at the moment in this climate. Don't be buying anything that's, you know, 70, 80, 100, 200 times earnings, guys, because I don't think the market's going to take it down the line. This is my old pal Overstock. I say my pal because every time I've gone into it, I've made money on it very, very quickly, guys. So yet again, keep an eye on all of these. I'm not buying anything at the moment, and don't plan to. Of course, if I do, I'll let you know. Plug dropped dramatically from its highs. It's another one I haven't lost any money on so far, guys. Made little 5% here and there with it, but it's come off an awful lot. And as we were indicating the other day, is there another downside to this? Although, to be quite honest, it's come down quite a way. And maybe this is the time to take a chance on it. Square. There's been another little downturn in Square. Maybe this is the time to take a chance on it. Now, I've just gone through and said I'm taking money off the table, and now I'm sitting saying maybe this is the time to take a chance on it. It's one of those ones, guys. Tree. Lending Tree. Not one. I can't ever remember. Now, if the charts that have that, if they were to give us a bit of that, then, you know, there's a 5 wave. That would be interesting to buy from there.